Welcome friends. In our today's session, we will be discussing about value of supply under GST and how GST is levied on business transactions, how invoicing is done, and also we'll talk about e-way bill, what is importance of e-way bill under GST laws. So friends, moving with first topic of the day, value of supply. So value of supply, nothing but a value of any product or a service on which we levy GST. Now question comes, how value of goods or services determined? Because when you are manufacturing a product, you have various elements of cost to that particular product. Major input for any product is its raw material. So if I am manufacturing yarn, but obvious I am buying raw cotton from the market, and cotton is being processed in the factory and we are getting yarn. So yarn can be my final product, or if I am having integrated plant of textile, I will go further with yarn to convert it into fabric. So on. So whatever cost I will incur for getting fabric from cotton, it will be worked out in a cost sheet by adding all element of cost like raw material cost, labor cost, consumable cost, chemicals cost, utilities like electricity, steam, mechanical engineering, electrical engineering costs, depreciation of machines, depreciation of building, overheads like security overheads, some other expenses incurred in the factory, maybe insurance, some administrative in nature, so and so on. So adding these all costs to the production, I get cost of production. And when I divide this total cost with the unit of production, I get cost per unit. So that is value of that particular product. In GST also, the value of product, the cost of production or the cost of product has its own value, because ultimately GST will be charged on the value of the product inclusive of my reasonable margin. Because whenever I am thinking of doing business, whenever I am doing business, I must have some profit on my investments, on my efforts, on my resources I used. Otherwise, I will not do business. Otherwise, business will not be a viable venture. So, the determination of value is very important aspect under GST. Wrongly calculated value, undervalued goods or overvalued goods are always creating problem under GST, because if any company overvalued its product, it means they are making more GST, paying more GST without having any reason. If it is undervalued, if company has undervalued its products, it means they are paying less GST and government may not accept it, the government department may not accept it, because then you are paying less GST. So scientifically and logically, we have to work out cost of a product, and only then if we pay GST, then there will be no dispute at all. So apart from the value of the product or value of the goods, there is another concept, that is transaction value in GST. And what is transaction value? If you go by the law provision, it says transaction value is the total price. Transaction value is a total price paid or payable or charged for supply of goods or services or both between unrelated parties. So friends, whenever we are buying anything in the market, when we are selling anything in the market, we charge something for that. So if I am selling a product, I am charging for that, and whatever the amount I will charge from my buyer, it is a transaction value. So apart from cost of production, what we have incurred to produce that particular product, if I have incurred some other expenses over and above production costs, maybe marketing, maybe logistic, maybe transferring, maybe shipping, maybe insurance, maybe transportation, etc., maybe commission or brokerage, all put together is my total cost when I am selling this product to my customer. So in that situation, whatever amount I will charge to my customer is a transaction value. So we can say that transaction value is the final value of the product on which GST is supposed to be paid. So here the condition is that whenever you are selling in independent market, both the parties, buyer or the seller, should be unrelated party. They both should be independent, and some amount should be charged to the product I sold or I supplied to the buyer, and accordingly GST will be charged on transaction value. Means whatever amount I have charged to my buyer is a transaction value which is over and above the cost of the product I manufacture. For example, if manufacturer supplied a machine costing 1 lakh rupees, also provides service of installation and commissioning of the machine, means when I have sold one machine to some buyer, supplying a machine is separate issue, but putting it into production is another issue. Means I have a contract with the party, with the buyer, that I will supply a machine and also will give you this machine in running condition, means I will give you demo also. But for that I charge extra, because then my engineers team will visit buyer site, they will get the machine installed at a place as earmarked by the buyer, run the machine, will take production out of that machine for a particular period of time, and for the all efforts I will charge 25,000 rupees. So what 25,000 rupees I have charged is charged for supply of machine and its commissioning. So putting together whatever amount I have charged from customer, it is 1,25,000. So this 1,25,000 is your transaction value and it is subject to GST. So the total amount 1,25,000 is subject to GST. This way we charge GST under GST laws, and value is determined for a product. So value of a product means cost of production, and also the transaction value, whatever amount you are charging from your customer, equally important under GST, and we must understand that concept. Because if any product is having GST at the rate of 12% or 18% or 28%, this with the help of this rate we will calculate the GST payment, and the value on which this GST is payable should be accurate. Otherwise tomorrow department will say that your products are undervalued and you are paying less GST, or maybe some auditor come to your company and will say you are having overvalued products, your actual cost should be around 100 rupees, but you are showing that your product cost is 102. So you are overvalued your products, you are wasting your resources and unnecessarily paying more GST. So your value of a product should be determined in such a way that there should not be any chance of mistake, and it should be calculated in formal way by adopting formal costing principles and costing records as prescribed in India by the Institute of Cost Accountant of India. By having these things in line, definitely your value of the product will not be a question mark, and tomorrow you will not be in any position to have a litigation with the department. So friends, as I told you, how we will work out the transaction value, which is the final cost, final price that you charge to your customer, and it is price charge, means actual price that we have charged based upon our costing, that is X factory price. Then any taxes, duties, cess, fee, charge is levied under any act, point is any act other than GST. So, GST is no doubt we will charge on the product value, but apart from GST, if there is any other tax you are charging on that particular product because of some state government has its own policy, it happens so many times, then that tax other than GST is also part of your transaction value. Further, any amount paid or spent by recipient means buyer. Here recipient means buyer who is receiving the goods. So, any amount paid or spent by recipient instead of supplier, but was supposed to be paid by the supplier. It happens many times in the transactions under business. Though some sort of expenses, some sort of activity is in the scope of supplier as per the terms of the purchase order or the terms of the contract, these things were supposed to be done by supplier, but considering the time constraint or considering the convenienceness of the parties, buyer himself does that activity. If that is the case, it means the amount or the activity which was supposed to be done by the supplier is done by buyer. For that, buyer has paid, but for GST purposes, for transaction value, we will add that amount to our product cost because it was actually in the scope of supplier. For the convenience of the party, it is done by the buyer only. So, that is also subject to transaction value and subject to further payment of GST. Moving further, any commission, brokerage, freight, insurance, packing, etc., if charged by supplier, because whenever you are giving any price of your product to the buyer, it includes everything. But sometimes there is a condition in the law, in the contract you have signed with buyer, that it needs some special packing or some special commission is given. In such situations, that commission, that freight, that packing is also part of your transaction value, which is over and above the total cost of the product. Any other amount. See, nowadays business transactions are very complex. So, you never know where something extra to be done for the buyer or by the seller. So, if you are incurring anything over and above your actual cost of your product, that cost will be part of the transaction value and GST will be paid accordingly. Lastly friends, any interest, fine and penalty on late payments. So, generally when we sell our product to our customer, we also decide payment terms. We may give 15 days credit, we may give 30 days credit, we may give 3 months credit. So, if payment is made well in time, there is no issue, but if payment is delayed from the agreed time, definitely we will charge some late fee or interest on the late payment. So, if it happens so, then definitely that amount what we have charged on account of delayed payments is also part of your transaction value. So, on that also you are supposed to pay GST. So, transaction value is important from GST point of view because whatever amount, whatever expenses we incur after production of goods, we will add to the cost of the product, keeping some margin for us and then charge GST on that value. So, friends, keep this thing in mind whenever you are dealing with GST cases, whenever you are supplying your goods, whenever you are raising your invoice, that amount should not be less than transaction value, because when audit will start, when an investigation will be conducted by the department, they will search each and every document and they will try to coordinate everything and will prove that your product is undervalued and you have paid less tax. So, these things are very, very important as far as GST is concerned. So, friends, while calculating transaction value, how to treat with discounts, under GST regime is a very, very important and relevant question. When I told you that cost of product plus other expenses incurred after production are part of cost of goods, that is transaction value. But at the same time, we all know that business communities offer discounts to their agents, to their customers. And if discounts are given, which is a normal practice in business, then what will happen to transaction value or to the cost of goods? So there is a provision under the law, Section 15 of CGST Act, you must read that section, Section 15 of CGST Act, which deals with the valuation of the products under GST. So provisions are given, solution is given under the law, and law says discount allowed before or at the time of supply. So point is important over here, that if you have announced discount before supply of goods, discount allowed before or at the time of supply through purchase order or invoice is allowed to be deducted from transaction value. So it's very clear that if you want to give a discount to parties, maybe to your potential customers, to have a long business relationship, you have to declare this your discount policy well before supply of material actually. So if you have fixed proper policy for your discounts for a particular customers, you have to declare it in advance before raising invoice, before supplying goods. And if you have done so, then whatever discount you have declared, that much of amount can be deducted from transaction value. So we give discounts for many reasons, sometimes because of quantity lifted by the buyer, sometimes because buyer is giving me immediate cash after delivery, sometimes because of some overproduction in department in our factory, or sometimes maybe because of festivals and all. So friends, discounts are allowed under GST, and the GST law says from transaction value you can reduce your discounts, but for that you must have clear cut in advance policy of discounts. If you declare discount after supply of goods, it will not be allowed. So once goods have been supplied, bill has already been raised and sent to the party, means buyer, and later on you decided to give a discount, that will not be allowed. Though you can give discount to the party, though you can have less amount from the party on account of after deducting discount, but in GST, the GST will be charged on the original value, which is derived without adjusting discount. So if you have supplied some material of worth rupees 100 rupees and 18% GST is applicable, so your transaction value is 100 rupees, your GST is 18%, your invoice value is 118 rupees. Material is supplied and consumed by the party also. After some time you realize and party pursued you for discount, some of the other reasons. If you allowed party 2 rupees discount, in books of accounts you may fix your sale at 98 rupees after giving 2 rupees discount. Your sale in your books of accounts can be 98 rupees, but as far as GST is concerned, your turnover is 100 rupees only, and you are supposed to pay GST on 100 rupees only, not on 98 rupees. So keep this thing in mind, it is very important, because whenever you are having discount policies, announce them well in time, otherwise the benefit will not be given to you. Next friends, discount given, allowed or announced after supply will not be allowed deduction under transaction value. I have explained you very clearly. So any year-end discounts for performance or target achievements must be declared before supply took place. So friends, there are industries like cement industry and so, they have practices of giving discount on regular basis, but their pattern of discount depends on the business performance of the year. So in financial year 24-25, if we have a policy and we declare in advance in the month of April or so, that during this current year, financial year 24-25, if any buyer, any dealer purchase 5,000 metric ton of cement or above, will get 2% discount. So how the quantity of 5,000 will be determined? It will be determined only in March 25, when whole year quantity will be added. Only then we will come to know whether 5,000 is lefted or not. So only after March 25, means in April 25, we will be able to give a discount to the eligible parties. So we supplied in the month of April, we supplied in the month of June 24, we supplied in July 24, August 24. At that point of time, we didn't reduce our invoice value. We charged full amount to the party. But on 31st March, we came to know that this party has done good business of 5,000 metric ton plus, so is eligible for 2% discount. Then friends, during April, after calculating total quantity lifted by the party, we will offer 2% discount and we will reduce our turnover accordingly for the year 24-25 and will adjust our GST payment accordingly. So if we have paid excess GST, it will be reduced. There are provision under law and it is allowed. So year-end performance based discounts declared earlier in advance before supply of goods, you can take the benefit and you can adjust such discounts in your turnover and you can pay less GST. But once supply is made but discount was not declared, you are not entitled. So friends, ITC, because whenever discount is allowed under GST or discount is not allowed under GST, it impacts my ITC. We will discuss this, how it impacts ITC, when we will be covering ITC chapter.